Welcome to the Argus Crude Report, the TMX series, a podcast dedicated to Canadian heavy crude flows now hitting Pacific markets. In this series, we'll delve into the newly commenced Trans Mountain Expansion Pipeline, or TMX, its evolution, and the impact of the pipeline's operation on global markets. My name is Gus Vasquez, and I'm the editorial manager for crude and LPG here at Argus. And today I'm joined by our new TMX reporter, Rachel McGuire. Rachel, last time we did the podcast, we had talked about logistics and some potential issues of getting barrels to the market. But now we've had about a month or so of shipments actually loading out of Vancouver and those barrels hitting the markets. And of course, us being a price reporting agency, the first thing that we always focus on, of course, is how these barrels are pricing and what kind of transactions are happening in the market. So could you please tell us a little bit about that?
Yeah, Gus, I definitely can. So right now, what we have seen so far for the high TAN crude coming out of the new TMX pipeline, Access Western Blend or AWB, those values have fallen about $1.65 a barrel in June to discounts ranging between about a $13 to $12.30 per barrel discount against October ICE Brent. For the low TAN crude coming out of the TMX pipeline Cold Lake, those values have fallen about $1.60 per barrel to discounts ranging between $12 to $11.70 against ICE Brent. So we saw that AWB FOB Vancouver averaged about $11.75 per barrel in June, compared to Cold Lake, which averaged about a $10.85 per barrel discount.
Okay, interesting. So those prices have been trending lower as the month has gone on. I guess that's actually quite a lot of supply going into the market. So maybe that's something, maybe competition too, but very interesting to at least know kind of where these prices are sitting right now. If we're in the Americas, then for us, I guess the point of comparison would be Canadian pricing at the Gulf Coast. And I know you've been tracking that as well, and you have some interesting things to say about that. So what have you seen there? What is the spread here?
Yeah, so compared to the US Gulf Coast, AWB FOB priced at an average discount of $11.80 a barrel. So that's about parity with FOB Vancouver levels, but AWB FOB US Gulf Coast ended the month at a lower discount of $13.80 per barrel. So Cold Lake, on the other hand, averaged about 15 cents a barrel less than FOB Vancouver values and ended the month at a $13.10 per barrel discount. So you're seeing right now FOB values make more sense out of the US Gulf Coast rather than Vancouver.
That is really interesting to me because when we spoke about all the challenges in terms of logistics out of Vancouver, if you can get the barrels out of the Gulf Coast, which is much easier to navigate, and you can get them at parity or even cheaper, I think that creates an interesting situation where people who might be thinking they were going to get crude out of Vancouver might still be getting it from the Gulf Coast instead. So that's an interesting dynamic and one that I'm sure we'll be keeping an eye on for the next couple of months to see how that develops. Since we're already talking about logistics, and we had talked about that last time, but it was more of a theoretical discussion, right? All the things that could go potentially wrong or could be challenging. We now have a month of data in terms of the logistics as well. So what have you seen there?
So since the start of TMX, of the 19 Aframaxes that have discharged by the 1st of July, 9 have gone on to very large crude carriers or VLCCs at the Pacific Area Lightering Zone. 6 have discharged so far directly at ports along the US West Coast, and 3 Aframaxes have directly gone to China, according to data analytics firm Kepler. 3 right now remain in transit for either Los Angeles or PAL as of the 2nd of July, although we are not sure exactly where they're going to go. We did see a Aframax that was chartered by a Chinese buyer partially discharge at Los Angeles before topping off a VLCC at PAL. So as you can see, there are a bunch of different ways to get TMX crudes to buyers, whether that be doing a ship-to-ship transfer at PAL or going directly to the port. So it's interesting to see right now people sort of figuring out how they're going to get the TMX crude and what makes the most economic sense.
Yes, that's absolutely right. The logistics are going to play a big part on how much of an ARB you can get on some of these barrels and where they're going to end up going. For our listeners who may have not heard the first podcast that we did on this, so PAL is the ship-to-ship transfer area that's just off the coast of California. And what that means is that you can take these smaller Aframax vessels coming from Vancouver, transship them into a VLCC, and then you get the economies of scale for the longer trip. So say if you want to go to places like China or anywhere in Asia, it makes more sense to just do that instead of taking the smaller ships directly. So I guess that PAL area, for the most part, is for barrels that are going, further away from the Americas. But there have been some shipments that have also gone into the West Coast refineries. So what have you seen there?
Yeah, so right now, about 2.5 cargoes have gone to Washington state refineries, and the rest have gone to refineries in California. And it's been interesting to see the half cargoes being discharged at various places. So, as you know from the previous podcast, an Aframax can only load up to 550,000 barrels at the Westridge terminal, where the TMX unloads its crude. But you're seeing some refiners take 225,000 cargoes. So it's interesting to see these places try out different crude slates and figure out if TMX is something that they want to run.
That's right. And when we talk about the West Coast too, we're talking about probably the lighter grades coming out of the old existing Trans Mountain pipeline. So that's the 300,000 barrel a day line that was already in service. Now that they've built the expansion is going to take that low tan and high tan heavy sour crude into Vancouver. But the existing line, the 300 line that was already there, is now dedicated to lighter crudes like MSW, mixed sweet, or Syncrude. And that's probably what the California refiners are going to be taking, and perhaps replacing ANS crude out of Alaska or whatever it might be. So that's the West Coast. What about things going to Asia Pacific? What do we have there?
So it's been really interesting to see Asia Pacific buyers directly take Aframax cargoes. So right now we have seen a Chinese chemical manufacturer taking a single Afra that was chartered by Suncor in mid-June. Another Afra will discharge the 5th of July in Qinzhou, China. And then another unloaded the 2nd of July at Sinochem's Maoming terminal in China. So it's been really interesting to see that because usually those buyers don't take the smaller vessels. They usually prefer the larger VLCCs. However, we have seen from PAL 3 VLCCs going directly to China, and then another VLCC with TMX crude went to the Jamnagar refinery in India.
And that India one, that was the first VLCC that come out of PAL. I remember that. I think we may have talked about it in the last podcast too. So at that time, it wasn't even certain that that kind of operation was going to be easy to do or would be workable. But clearly, we've now seen many VLCCs loading at PAL, so that is not an issue, at least not one that has shown up yet anyway. So that's super interesting. And, as much as we love to talk about what's happening on the water and everything, we do also have to focus on what's happening with the pipeline itself, because there's some resolved issues there. And I know you've been looking at, what's probably going to happen here in the next few months, right?
Yes. So right now, the big question regarding the pipeline is what are the tolls going to be? So right now, the tolls on the pipeline have yet to be decided, and decisions aren't likely going to be made until 2025. So the TMX pipeline is owned by the Canadian government itself. And so right now, people like the government, the shippers, Trans Mountain, the actual company, they're disagreeing so far on who should bear the additional cost of the pipeline, which pushed the project to about a $340 billion Canadian dollar price tag. So there's still a whole lot of uncertainty because the final tolling arrangement has yet to be determined. And the Canadian government is also interested in selling the pipeline, but who is going to take on the very expensive price tag? We don't know. There's still a lot of uncertainty within the market regarding TMX.
Indeed, there is. And that's what makes it so interesting. And that is why we will probably need to have a few more of these podcasts to cover everything as things continue to evolve. But I think for today, we've covered quite a bit. That's a lot of information. So thank you, Rachel, for that. That's really interesting. For our listeners, if you would like to know more about Argus's view on TMX, we are planning on releasing a third podcast probably in a few weeks here, and I imagine there may be more after that, so keep an eye out for those. If you are looking for more in-depth daily coverage of what's going on in the Americas crude oil markets, generally speaking, well, subscribing to Argus Crude is probably your best bet. You will gain access to daily price information for all the assessments globally, and that will include things like assessments for WTI at Houston, for example. Plus, you'll get exclusive insights on TMX as we continue to cover all the developments. So please don't miss out on this valuable resource. We do thank you for tuning in, and we look forward to having you with us again on the next episode of the Crude Report, the TMX series. Thank you so much.